This is Cece. Welcome to the Orbit. It is Wednesday, May 1st, and it is an FOMC day. This is something we've been pointing out since last week. This is going to be a big 1-2 punch of the FOMC day today, followed on Friday by the jobs number. We have obviously a bunch of big earnings this week that are moving markets as well. Last night we had AMD and Amazon. We've got Apple to look ahead to. I tweeted out something yesterday, and I've talked about this on the Orbit on past FOMC days, or any day that has a late in the trading day economic event as big as this one. And what ends up happening, especially on zero DTE options, is that IV continues to climb during the day as traders sort of preserve that option premium into the event. You do not see this typical theta decay throughout the day. So like right now we're looking and we've got about almost a 0.8% expected move. That's the same as we closed yesterday. We closed yesterday at about just over 20 vol, under 25 vol. And you can see what's happened during the day is we are now at 40 IV for the options expiring today. And that is producing and preserving, if you will, that close to 0.8% expected move. So as we get towards the Fed announcement, that IV will continue to climb. We may not be at a 0.8% expected move into the Fed announcement, but we probably, most likely, typically would be at least 0.6, if not 0.7% expected move. And what that is that's options traders, options market makers continuing to say, all right, the expected move just under 40 points in either direction in SPX today. And traders want to preserve that and basically not get caught offside selling options because of a normal decay throughout the day. Selling options so that are pricing an expected move of only 15 or 20 in either direction into the Fed announcement, which is how a normal theta decay of zero DT options would normally work when you did not have an event like that late in the day. So that's what's going on there. And what does that mean from a zero DTE trading standpoint? Well, it means that this Iron Condor, assuming the SPX did not move a bunch over the next hour or two, this Iron Condor and these levels and the premium received, you're not getting rewarded for doing it early in the day. After the Fed announcement, what's interesting is the announcement will come out, the market will make some initial moves, but afterwards, after the announcement, volatility doesn't collapse. Options do not collapse, even if you get a move higher, let's say, even if it's a small move higher, because you still have the question and answers to come. And that's where a lot of the headlines are made, is the room trying to read, and the room being all of Wall Street, trying to read Powell's take. And then you see volatility into the close, and then a lot of times volatility the next morning. So as a premium seller, you have to be very careful with your timing around that. But if you get absolutely astronomical volatility spikes, and you can get trades and credit spreads really far away from the money, there's opportunity there. And then for directional traders, premium buyers, if we go out, let's go to the 1 week chart in SPX, and let's clear this trade. So if you go out to Friday, Friday's 23 vol, that's a little bit pumped. That includes the non-farm payrolls jobs number. If we go out to next week, and I'm just using SPX as an example. This could obviously be SPY, this could be Qs, this could be individual stocks. If we go out to next week, we are back to 16 vol out there next week. So from a premium buying standpoint, maybe you look out a couple of days, maybe you look out to next week if you were looking for this to be a catalyst for the market to go higher, or a catalyst for us to go back down below last week's lows, not being penalized a lot for going out next week. This 16 IV, particularly if the market went lower, that 16 IV is quite reasonable. If the market went higher, perhaps that IV comes back down below 15. If we have a good couple of days into the end of the week, you might see that vol next week on a Wednesday of next week be closer to 14. Iron Condor, and check out those levels. And let's do the third. Go in here, and you can see these levels. The short call 50.95, the short put 49.60. On the 1 month chart, you can see that lower strike level is right near those prior lows from last week. That this, and let's say we wanted to go a little bit wider on this and get this to about risking 200 to make 300. You can now see we're at or below that prior low, and we're up near that recent high. You can go even further. Let's say we got down to about the risking 350 to make 150. Let's zoom in a little bit here, and we've got the 49.40 and the 51.15, and that's basically trying to frame some of these highs and lows over the last week and a half.